Hi, and welcome to Doc's Market Minute for Monday, July 13th. The market's been open for about a half an hour, the cash market, that is. And this is the S&P. We've had a nice little bounce overnight, and the S&P right now is up about 18 handles because of the Greek situation. It looks like some certainty is coming back into the market as the Greeks are sort of being forced to do what they have to do anyway. So no real surprise. However, something I've noticed here in the S&P, which we don't want to get too complacent about this bounce and just assume that everything is all over, because as I've been pointing out lately, any bounce that we have could just create a lower high that institutions sell into and create a very quick distribution to the downside. So again, it's best not to try to get a bias with this, a positive or negative bias. Just frame in the price action and understand what it is telling you. All right, so what we have right now is we have a weekly downtrend. Charts are in place of a weekly downtrend. So before that changes back to an uptrend, we'll have to see what it is necessarily going to do here. The other thing I'm noticing here is the number of the average swing length is starting to decline. That first swing there back in April was about 78 points. This one in May was about 67 points, 58 points, getting smaller. All these rallies are getting smaller. And so far, this one is only about 53 points. Now, again, like I said, the market's only been open for about 30 minutes so far. First day of the week, so I'm not pronouncing this particular swing dead. However, this is the sort of thing you have to see, is that once it reaches that average swing length, which is somewhere between 55 to 70 points or so, what's it going to do at that point? Is it going to just roll back over again and make a new lower low? Or are we going to find ourselves on the other side of a higher low, higher high? These are the sort of things that you have to sort of map out in advance to understand what's going on, so that we're not getting caught in this back and forth seesaw of price action, which is driving people nuts lately. So the point here is that it might not have much more to go before it rolls over for the next low, and whether or not that creates a higher low or a lower low is really the story here. So it's not what's happening today. It's nice that it broke out to the upside. It's been unable to get above 2085, but now that it is, are institutions selling into that strength? We'll have to see. Okay, now here's the FXI. This is the ETF of China, and while it's not a perfect proxy of the Shanghai index, it's pretty good, and at least it shows us what's going on over there. So it's a derivative of the Shanghai index, but it's, like I said, it's all that I've got to work with right now. So let's not get too far in front of ourselves. This is a monthly swing down, and as a part of that, there is a weekly downtrend in place, weekly downtrend. So this is not going to just instantly reverse back up to an uptrend, not just yet. And in fact, what we're seeing here at the daily chart, lower highs, lower lows, right? We still have a downtrend in place. So far, all we're seeing right now is just a bounce back up to the 200-day moving average. And it wouldn't be surprising to see that roll over again, because you can see the average swing length bounces up about this far before it rolls down. So bigger picture, what we ought to see, and I talked about this a little bit last week, bigger picture, what we ought to see is a very strong rally at some point off of here, but all that's going to do is just produce another lower high before it rolls over. This is very likely what we're going to see. Very unlikely that we're going to see an absolute V-bottom here. So a lot of damage has been done to this chart, and because of all that damage, what we're going to see is selling into strength is going to be the nature of this. So buy the dips, sell the rips, and we're going to be seeing some rips coming along, which should be sold into on China. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.